The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 1st. Happy May 1st. Hey, happy birthday, Kaylee, my daughter. How about that? It is Terrific Thursday, and today is the, it's not the opening bell, the Trader's Edge. This is the Money Masters show. Hey, I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. These are the words of wisdom brought to us by our extraordinary producer, Al. Thank you so much, Al. And he starts his day off with this incantation. He says, watch your thoughts, for they become words. Couldn't agree with him more. Watch your words, for they become actions. Hey, I hope massive actions out there. Watch your actions or your massive actions because they'll become your habits. Watch your habits, for they become your character. And finally, watch your character, for it becomes your destiny. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the Money Masters Show. Let's go check out the destiny of the markets out here. Right now, we've got the Dow trading off 10 points. Trading out at 16,569. S&P trading down 87 cents. It's trading out at 1883. NASDAQ up 5 points, trading out at 41.19. It is all going to be about the NASDAQ. The NASDAQ is going to lead this market higher, folks. It's going to take charge in the not to sell in May phase that we are in as we speak right now. Russell 2000 off 8 points. It's trading out at 11.18. New York Stock Exchange down 8 points out there. Not a big deal. Of course, Goldilocks and silver. You got gold right now off $15 off of its session low. Silver's down 20 cents off of its session low. Silver trading out at $18.97. Goldilocks trading out at $12.80. Forgot to look at light sweet crude last hour. I won't make that mistake. We'll look at it this hour. It's trading out at $98.94 right now, down about 80 cents or so. Our call-in number is 877-927-6648. Give me a call, folks. Happy to take your question. Answer anything that I humanly possibly can. Yes, I did say it's all going to be about the NASDAQ pulling us on the way up, not pulling us on the way down any longer out here. Well, of course, it's got a little hurdle that's going to have to overcome. This is the futures contract. This is the June futures contract out here. It's headed to its descending price channel. What's that price level? It's probably somewhere around, 35.90, 35.95, 35.96, 600 even, Stephen, somewhere right around there. We're going to watch to see what happens as the NASDAQ gets up. Is that going to be a selling opportunity? I don't know. I think right now, with the intraday charts, and we covered that during the last hour, but the 120-minute chart here for the NASDAQ tells us that what? Tells us that it broke its descending price channel out here. You're going to see a change in trend take place on the shorter-term time frame chart first, and it broke its descending price channel. It came back and tested that level beautifully on April the 28th out here. I believe what the NQ wants to do is move up to about 36.95. You're at 35.85 right now. Yes, 36.95. That's about another 110 points north of where we are at right now. We'll see if it can find the energy, if it can muster up the energy to do that. Of course, you'd like to see it get the energy from the euro yen currency pair, but really that's just been trading sideways out here. Didn't cover that last hour, but here's its a rising wedge pattern, and the euro here could just simply the timing of it says to me the euro just simply trades sideways to about the end of next week or so, the middle or the 12th of May, maybe, before it actually breaks through here. So it's not that it's irrelevant. It's that the euro, Japanese yen, is really not providing us with any solid information one way or the other. So then we just fall back on the other liquidity gauges out here. You go back and fall back into the VIX index, see what the VIX index is doing. You know, when it's traveling below the 50-day exponential moving average, well, that's when you've got good liquidity. Markets either do one of two things, move sideways or move higher when that occurs. Right now, you got the VIX trading out at 13.47. The 50-day exponential moving average is $14.38 out there. So long and strong with regard to really both of those indicators out there. We've also got the New York Stock Exchange, its price oscillator, its summation index. It's turned up 530 issues is what would be needed today to the downside in order to let the bears take control of the ball. Right now you've got 363 net declining issues. It'll need 530 or more at the end of the trading session to have to really give some pause to whether or not sell in May is really going to come to fruition. So let's not focus too much time on that. I did mention that I overlooked light sweet crude in the first hour, so we're going to get to that right away out here. Light sweet crude right now is on its way down to 98.44. That's the 1-to-1 version of the A to B equals C to the downside. But will it stop there? I don't think so, although there's a swing point that it's going to where you do have some bulls out at the April 2nd low at $98.15 out there. So it should find some support, but it has broken through its rising price channel out here. And that is not well, it's a good thing for you and I maybe at the pump eventually out here. Not a good thing as we speak here right now, though. I think last time I checked, that was well over $4 a gallon when I went to fill up my car, and that was only just a few days ago. In any event, let's go take a look at Goldilocks and silver. Let's go see what they're doing. We have had some tests of swing points, important swing points for both of those. We'll pull up the see which chart are we pulling up here first. We're going to pull up silver first. So the swing point that silver has tested thus far, it's been that December 31st swing point. So we've been waiting for, in essence, a test of that swing point out there. The low is $18.72. We've seen a spike here earlier this morning. Silver got down to $18.68. It is very important that it holds that swing point. A close below that, that is going to send off a move in price down to probably the 17.77 area. So silver, very important today. Now, how will we know if silver, if this area here is held, it's not going to turn into a butterfly? Well, I think one of the ways that you would find out is you would actually see silver break this descending trend line out here, and that's a trend line coming off of the highs from March the 14th, and then again the high here on April the 10th. So those are our parameters here for silver. Let me switch over, take a look at the short-term chart, because on silver what it did was I don't know why the system wants to do that to me. Let me see, give me a minute here. Maybe I have just too many things running in the background. It's not showing me the spike low. So it'll just take a moment to do that. It says it's not responding, but I know that it's responding. Right now, the Dow is off 25, S&P down a couple of points out here. There we go. There's our spike low from a set of swing points, but no bullish reversal signal here yet. Just a working off of an sold condition. This is a 30-minute chart that we're looking at inside of silver. So nothing here yet that is extremely bullish. Volume-wise, also 1,800 contracts during the 30-minute session that ended at 10 o'clock, 1,700 contracts. The session that ended at 9:30. We're in a session, new 30-minute session right now, halfway through it, and about 1,400 contracts. That's going against this downdraft of 6,500 contracts here at 8:30 this morning on that big bar. It would do itself some good to get above that bar, though. $19.08. You trade at 19.05. We'll check back, try to check back in on that before the show is over. Let's go and take a look at Goldilocks. Now, gold dealing with a swing point also that is very important. That is the swing point from the 1st of April, April Fool's Day. That level is 1277.40. We've already seen one spike of that area, and that took place on April 24th. That level held. In fact, you saw a nice little reversal signal here. You should have some support. Gold should have support at 1268. If we do see a close, though, below 1277, If it's done with more than 133,000 contracts out there, that would not be a good. Well, it would be a good scene if you're looking to buy gold at a lower price out there. But that would be the message behind that. So key number today, 1277.40. Of course, it's going to be key number any day until gold breaks its descending. Well, it's a descending trend line is what I should say, and that's a trend coming off of the March 17th high, 1392.60, as well as the high on April the 14th out at 1331. That is what's going on inside of Goldilocks. If we go take a look at, let's go take a look. We ended the month here. Let's go take a look at some monthly charts out here. Let's look at the indexes. We'll take a look at monthly. We'll take a look at daily. In fact, let's start off here. Let's take a look at the daily inside the Dow. If we take a look at the daily inside the Dow, this is the Rhodes Momentum Indicator that we've got up on my screen here. We know that the bears are camped out at the highs, in essence, that we were put in back on December 31st, 2013. How do we know that? Because we can see, if you're looking at my crosshair out here, I wish I could make that bigger for you, we can see that you had nice, last time up here into this level, you had a little doji candle. That was on April 3rd, bearish engulfing candle next session. So this area that we're in, which is at the price point here, the high there on December 31st, that high is 16,588 and a quarter. Very important level in order for the Dow to get through. And if the Dow gets through there, let's go back here. I'm going to switch over and take a look at, we'll switch between different charting platforms out here. Let me go into the futures, because what we've seen the Dow doing is also traveling with inside a consolidation. And I believe it's about a 600-point consolidation, which it's trying to bust through. This is the consolidation. This is a continuous contract that we're looking at. The consolidation low about 16,150 and the consolidation high about 16,508. So that's what 150 to 5. So what's that? 350 point. Let me just do that. Let me do that math again. So you got 150, 250, 340. Yeah, 350. So it's a 350 point move. If in fact you can see the Dow get above, it's key reversal session. Last time up here was April the 4th. You got a convincing no. I don't want you to go higher when it formed a key reversal, and that was on April the 4th out there. You could get a key reversal session. Well, we've had several of them. You could get another one today. Now, last one actually was out here on April 24th. That led to a retracement, a potential C point of an A to B equals CD to the downside. And if we take a look at what that would be, it's probably equivalent to the move that we're looking for in that consolidation out here. So it would say 16,873. But if we're looking at 350, 16,850, yeah. So how about that? So there would be your A to B equals CD if, in fact, as well as the measured move of the Dow. But, of course, we know that this is to see, to be here on your first day of May, sell in May, for it to run into what you know is resistance, it would really be normal. Now, you see a key reversal session today. And we'll have to take a look at volume, but this is the hurdle that it's got to overcome. Key reversal session today would see some type of spike below 16,432 out here. If we go take a look at the longer-term chart, let's go pull up the monthly chart here, see what took place inside of the Dow. We'll switch over here. You'll see that for the month, where there was an opportunity to form a key reversal in the month of April, it did not do so. Nice additional bullish candle. In fact, if I pull up the actual Dow on the monthly chart, let's see, you had this little bear sash candle. That was from January. That high was 16,573. You're at 16,533. So moving above 16,573, that would be also bullish as well. We're not there just yet. Right now, we got the Dow's off 47, S&P down 5. NASDAQ up 3 points. NASDAQ 100 up 3 points. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 37, S&P down 4. So let's go take a look at the S&P. Let's take a look at the monthly chart out here. Monthly chart for the S&P 500. You can take a look at the candle formation out there. Another bullish candle, really. Small-bodied candle. Nonetheless, we can see here, if we take a look at the monthly chart, you can see how the bears did what they could to drive price really right down to a support line out here. And, of course, the bulls rushed in. They were able to push them out of the way on a monthly basis. There is nothing bearish about the S&P 500 monthly chart that we are looking at right now. In fact, really nothing bearish at all. Now, if we go and take a look at the, I'm going to switch over here. Like I said, we're going to do just like I did last time we took a look at the Dow. We're going to go over and take a look at the futures contract here. And the futures contract for the ES Mini shows what? It shows a couple of things. Number one, it shows a nice big 112-point consolidation pattern that it has broken out of. What it's doing right now, it's really running into this resistance. You can just clearly see where the bears, so we know that this is a hurdle that needs to be overcome in order for the fruition of this 112-point move, which would take the ES Mini up to the 1957 level. And at this stage, so you've got to expect this congestion. It's like driving down an expressway, and you know that day in, day out, there's going to be a certain, you come around this curve, you can't figure out why. Okay, why traffic always stops there. I know I've got a couple of those curves in life. You don't know why. You just know that it does. Must be all the ghosts and goblins and what have you. Well, in the case of the stock market, we actually do know where price is going to run into resistance because we know where the bears are. They're leaving their marks. They clearly tell us where they're at. You got these bearish engulfing candles, these key reversal sessions. Most recently, we had one here on April the 24th. That price level, 1882.50. is the number. Intra-session high so far today, 1880.50. You're trading at 1874, about 6 points below that area. This is the area where the bulls have to get through. Is a little congestion. The real congestion before the expressway opens up to the where you can put the where the ES Mini will be on the Autobahn, where you can just totally open it up, let that beamer fly, is going to be getting above 1892.50. The ES Mini gets above 1892.50, folks, and it should have the freedom to run all the way to that 1957 level out there. You're at 1875 right now, so you're looking at about another 75-point move north out here. And I suspect that is more likely what we see before we then start taking a look at entering into the unfavorable seasonal sell cycle that is out here. Bears had every opportunity in April to do the damage that they needed to do to then begin the sell in May phase out here, and they blew it. I mean, they blew it. It's as simple as that. Absolutely blew it out there. And in fact, yesterday was 3 Game 7s in the Stanley Cup. Can it possibly get any better than that out there? So you got congratulations going out to the Rangers. They defeated the Philadelphia Flyers there, score of 2-1. How about Minnesota? Winning in overtime, defeating the Colorado Avalanche out there. So my apologies. I think we probably have more listeners in Colorado than we do in Minnesota. So congrats to Minnesota. 5-4 was their final score out there in Los Angeles. How about that? Los Angeles coming back, winning 4 in a row. Clobbering San Jose. They were down, it's a 7-game series, and Los Angeles was down, 0-3. Came back. They just simply did things, one day at a time, one game at a time. That's what they focused on out there. And we've got, so one day at a time, one bar at a time. We know on a daily chart where the bears are and where the bulls have to overtake them in order for this move here in the S&P. So we know the S&P is strong. We know the Dow is strong. They're up against resistance. We know that the Nasdaq is weak. If we go take a look at the and we took a look at the NQ earlier. I don't need to do that. We can switch over. We can take a look at the ETF structures though. Let's go do that. Let's take a look at the daily ETF structure. In fact, we'll switch back and forth. We'll take a look at the monthly. We'll take a look at the daily. Let's start off by looking at the Qs, though. And what do we know about the Qs here? Let me get rid of this A to B equals CD to the upside here. Qs right now broke through their descending price channel. Their price channel is going to be different than the one that we take a look at on the actual futures contract out here, but it has broken through that area. The real key level to be watching on the Qs is going to be what happens as price gets above 88.21 or takes on 88.21. That's the swing point. That's the B point of an A to B equals CD to the upside. And that price is at 88.21, 48 million shares traded that day. Yesterday you were pushing up with 38 million shares. It's going to need some more energy. So far this morning, 9.9 million shares. Not too bad. Not too bad of a start here for the Qs. So the key level here is going to be 88.21. You get above that, that may form an A to B equals CD to the upside. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Room 222. Yeah, the S&P down $2.22 right now, trading out at 1881 and change. What we've got up on the screen here right now is the monthly chart for the Qs out here. So we ended the month, no bearish reversal signal inside of the Qs. So one of the weaker, certainly one of the, arguably one of the weaker indices. So we took a look at the daily chart out here for the Qs. We saw that it had broken through its daily descending price channel. We know that on the daily chart for the the futures contract. It is coming up to its descending price channel out there, so it's going to be important for us. We also know on the 120-minute chart, it broke through its descending price channel with some conviction out there. So you're going to see, if there's a change in trend, you're going to first see it on the intraday chart, like a 120-minute chart, then you'll see it on the daily, weekly, and so forth. Of course, on the monthly chart out here, not giving any kind of a reversal signal. Let's take a look at the IWM, a little bit of a different story out here, I believe. But let's look at the monthly chart. Yeah, the monthly chart out here, you got a big old bearish engulfing candle last month. That means here in the month of May, we need to see a lower close. So the month of March, little pause candle, little resistance candle, little doji out there. We saw some leaves fall off of the tree. Real key level here inside of the IWM is going to be 107.91 out here. That's its next level of support. Of course, very key, the candle session this month. Again, it's a monthly chart that we're looking at. Let's take a look at the SPY out here. Let's go see what the SPY has in store for us candle-wise. Little confusion candle out there. High wave candle formation out there just means the market is a bit confused. And, of course, it's confused. Why? Because it's sell in May, and it's not sure what it wants to do. I think what it first wants to do is move higher before yet he potentially even begins to kick in out here. Still, high wave candle is nothing more than confusion. It is not a reversal signal whatsoever. It is real important if you are using... Now, here's the key, folks. Japanese candlesticks, what they tell you, they're not... You can't trade off of them, meaning if you see a hammer, you just go long, or if you see a bearish engulfing, you just go short. If you're doing that, because I've back-tested that strategy, you'll end up with a losing proposition. So they are signals that are best used to match up against other patterns that you trade out there. They absolutely do give you a message, though, as to what is going on, and you want to make sure that you use the candles properly. Because they have very important messages in them. When was the last time that we saw a high wave candle on a monthly chart form inside the SPY? Well, it was all the way back here in November. What was that, November 2012? Let's see, November 2012 out there. Of course, you can see that they had two high wave candles in a row. So the market had taken kind of a pause back in December as well, and then, boom, moved up and motored on through. The last time we dealt with a May, by the way, a sell in May. Here's the month of May of 2013. So here's April. We're looking at right there, April, the S&P, the SPY, I should say, 159.54. So don't get too caught up into those beautiful expressions and sayings out here. Now, look, I've done the studies on it. And like I said, I'm going to see if I can go find that special report that I did, see if there's any updating that needs to be done on it. But what you want to do is, what are the patterns? What is the real message of the markets out here? You can see the May of 2013, no problem. June, you saw a little bit of a move lower, no bearish reversal signal or what have you, and then boom, continued to move higher inside of the markets out here. So on the monthly charts, all we're seeing is that little, hey, I'm a little confused out here, but I think the confusion's going to end up in a upside move, at least on the daily charts for some patterns that it wants to complete. That's what's going on inside the SPYs. Let's take a look at the diamonds out here. Lucy in the sky with diamonds right now. The diamonds are trading out at 165.27 out here. No bearish patterns. In fact, well, the key number here, you had a bear sash candle. That's a reversal, but it didn't have any follow through here the month of February. This was the month of January. Nonetheless, it says resistance inside the diamonds is going to be the high of December. That's at 165.51. Here, 165.27. It clears that area, and it basically has no resistance no resistance period in place. For the diamonds. So on the monthly charts out here, really no damage when the plenty of opportunity for the bears to truly get their mojo going, and their mojo is gone as we speak right now here. Let's go take a look at some of these stocks here that are moving. In fact, what I wanted to do yesterday, had a couple of calls. Let me see if I still have those stocks up. I don't know for sure if I do. I wanted to... I don't think LinkedIn was one of them. What was it? No, it wasn't there. Let's try show up. Let's see, what do we have here? Citrix. This week's candle will be very important. I've seen it's given back some of its gains, but this thing, it looks like it really does want to move up and at least get to the top of its descending price channel out there. That's CTRX as a ticker symbol. What were the calls about yesterday? Let me try this one other tab out here. I just wanted to go through and maybe update what was going on there. No. Looks like I don't have one. One could have been Bank of America. I believe one was Bank of America out here. So on Bank of America, let's go take a look at its TAS signal box market profiles out here. Let's do that. Let's put up Bank of America, BAC. Let's go see what it is doing out here, because we have some other tools. So we had a caller asking about Bank of America, and my apologies for the second symbol somebody called about. Let's take a look at the weekly chart in Bank of America. It's using the TAS signal box market profile. So the weekly chart obviously having priority over daily, over the weekly is that's the weekly chart. Let me pull this back a bit, make it a little bit easier. So you can see even here on the weekly chart, it is it's in also bearish mode out here. I just wanted to see what these. And this says resistance inside Bank of America on a weekly chart, 1651 as we speak right now. I don't want to do that. I want to do this here. Grab the right tab. Let's see what the daily chart here for Bank of America. So Bank of America right now on its daily chart, it's got a brand new box that just opened up today. It says 1502 is an important level for it to hold. So it's got its next resistance level here at about 1552. So a bounce up hitting 1552 and moving lower would be the likely outcome, and that is inside Bank of America. Let's take a look at some of these stocks here. I'll switch back and forth between tabs. Let's take something here that is moving. I don't have the chart up on my screen. So you got Priceline leading the charge, Netflix leading the charge, LinkedIn, Hardware International, not a symbol. HTWR is the ticker symbol. Let me put that up here, HTWR. Let's go see what it is doing. And it is going to be all about the NASDAQ leading the charge on the way up in this rally that we are going to see unfold here. So let's take a look at the daily charts. So for hardware, HTWR, this thing on the daily chart, it took out a resistance level, which was right around the $89 mark out here. Of course, it is made an A to B equal. It's more than made the 1-to-1 A to B equal C. If we go take a look at that, the A point on this is the low here from the trading session of April the 11th. That A point is low there is, $80.15. There's your A point. Your B point is a couple trading sessions later on April the 15th. April 15th makes the B. That high was 88.06. The C point looks like that came in right down here on April the 28th, right as it was traveling right into the support area. So the 1-to-1 A to B equals CD. Heck, it's powered through the 1-to-1.272 this morning. In fact, it's already touched the 1-to-1.618 up at the price point of 95.31. The actual inter-session high so far has been 95.19 out here. So let's go see. Is there some volume? Here's where it's going to run into some potential trouble. So here's the supply line. This is HTWR is a ticker symbol. Heartwire. It's got my heart right now. And that is running into some supply right out here on the trading session of February 27th. Had a downdraft out there. Looks like it did volume of 680,000 shares. So far this morning in the first hour and 12 minutes of trading, it is up with 210,000 shares. So 210 moving into 680, not too shabby. That is on Hardware. Looks like it's changing its changing the trend on the daily chart. Let's look at the weekly chart for it. Weekly chart says it's got some resistance out here at the 96.32 level. If it can get above that, it remains bullish up to about the 104 area, where it should also run into resistance. Let's go take a look at some other stocks here that are moving. Let's see. So that was on Hardware. Let me switch over to this symbol page here. Let's take a look. Let's take a look at some things to the downside. So let's scan here. Stamps.com. Stamps.com, that is getting clobbered this morning. STMP, it's getting stamped upon. It's down 17%, trading down at 605. So let's go take a look at STMP. Let's go see what it's got, STMP, what kind of patterns it may be forming, what its weekly and daily profiles look like on here. So while that populates, let's look for potential patterns here. So it is trading below. It broke through this morning its potential support area of 3209. Clear downtrend channel. Let's see if we can find any high volume. Okay, so here's where it's making its way back, and it's doing it with light-ish type volume. This thing broke out. You can see the nice wide-ranging bar. You can see the nice price spread. Volume-wise here was on the trading session of April 22nd. April 22nd, 3.5 million shares to the upside. Nice ranging bar. The low of that bar is $23.42. It's at $28.49. Looks like that is where it is headed to as we speak right now. And it should find some pretty decent support right down around that original breakout session. That is what the weekly chart is showing us. That is for stamps.com. Let's see here. What else we got moving in the marketplace? Let's take a look at percentage-wise. Let's take a look at this one here. United Financial Bank Corp out here. They declared a dividend. Looks like they're declaring more than that. To the downside, this is off by 25% this morning. UBNK is the ticker symbol. UBNK. Let's go see what it is doing out here. We'll take a look at a weekly chart, see if it can find any support out here. So here's your high volume bar that it's dealing with. So it's trading right now into the trading session from a weekly basis of September 30th, 2012, 1.6 million shares that week. We still obviously have another day and plus, almost 2 days in the trading session. It is down so far this week with 771,000 shares. Did it make a high with volume? Yeah, but it made a high with volume, but not such a high volume high that it needs to get back up there and test that level. Nonetheless, right now, UBNK, it is trading into some daily support out here, $12.77. So it's tested that area, and so far it has held. UBNK is the ticker symbol. Let's see what else should we go take a look at here. Let me switch over and see what we've got. Let's take a look at to the upside. Let's see what name. How about Yelp? We haven't looked at Yelp. Let's go see what Yelp is trying to do out here. Now, moving higher today, let's go see what kind of volume it's got behind its move out here. Trading out, it looks like at $66.39 out here. So it is on a daily basis out here. It's in a nice little bullish mood. It's up above its profile resistance area. It's unfair high. That was at $60.68. Looks like this should move up probably to about the 80-ish level here. That was the old resistance level. This new box here just really forming over the last two trading sessions. So it looks like Yelp wants to make a move up to about $80. What else do we have at Yelp up at the $80 mark out here? Got a little bit of resistance, just a little bit of resistance up here at the bar from April 4th. But it looks like here's where the $80 level takes us to. It's where we had a sign of strength. It's priced obviously below that, and that takes you back to the February 6, 2014 area. The low of that session is $82.30. So it looks like Yelp is on its way up into that level. That's what the daily market profiles are providing to us. And on the weekly here, it says it's got some resistance right here at about the $73, $74 area, YELP out there. Let's go take a look here at, let's switch over and take a look at some other things. Let's see, we've got a couple minutes here left in this session. Let's go back. Let's take a look at the intraday charts out here. Let's go back and take a look at the 120-minute time frame. So here's the here's the 120-minute time frame for the NASDAQ. I covered this in pretty good detail during that first hour. And in essence, let me get rid of some of these retracement levels. I'm going to clean this up just a tad out here. And so what we've got going on inside of the NASDAQ, the real key is going to be inside the NQ. What happens at the price point of 36.18 and a quarter? If it can get through that, price should move up to the top of the rising price channel, and I would have to say it'll get up to about the 36.94. We're at 35.94, so that's 100 points north of here is what I expect we will see the NASDAQ do. And I do expect we're going to see the NASDAQ really kick in, and I think that everything was done to the overdone, quite frankly, to the downside out here. And a number of reasons. You know, the New York Stock Exchange really was just screaming to us the more that I analyzed what was going on in the wider swath of the market. You know, that thing turned bullish a couple of days ago. I can tell you that my clients and I, well, you were listening to the show yesterday, and we were neutral yesterday during the show. I waited for the reaction, the market reaction to what to the Federal Reserve. Prior to that, I had laid out the groundwork with regard to what the markets were communicating to us, and the markets were communicating to us that we put in a significant low back in. Recently out here, when was it, April the 15th out there, a significant market low. So I laid everything out as the reason what the markets were telling us, but I said, let's take a neutral position. Well, yesterday at 2:30, 2:45, we didn't take a neutral position any longer. We went long. Yes, we went long the NASDAQ. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow right now is off about 4 points. S&P slightly a point. Composite NDX 100 leading the charge to the upside here this morning. They're up about 4 and 0.6% respectively, each up about 20 points. Russell 2000 off 2. So that's the laggard. That's the next area that we want to be really watching for. Now, folks, Well, what you want to do, I opened up this show here and talked about the importance of really differentiating between tactics and strategies out there. So tactics are the different patterns that we trade, whether they're A to B equals C to whether they're butterfly patterns, whether it's test of swing pools, whether it's a Chapman wave, whatever it is. All those are just different tactics that you can use out there. But you want to make sure that you've got a strategy. And part of that strategy, folks, is making sure that you are bracketing your orders. You've got an exit plan on both sides of the trade out here. All that we do is take the information that the market gives to us at this moment, stay inside your time frame, and then continue to trade. And when the market goes ahead and gives you when it gives you some different information, look, if you're long and the market says you shouldn't be long, go ahead and close out the trade. This is a business about capital retention, making money. It's about this whole business is about making your money work harder for you than you do for it. And money, it's the most emotional thing that's out there. That's why you've really got to get your mind right. When you are trading out there. So if you haven't had a chance to, whether you haven't, had a chance to drive probability. Like the reason that you should subscribe to the newsletter or at least test it out is because I do get your money to work harder for you than you do for it. So just as an idea, I mean, if you've got $100,000 in your trading account since August of last year, you would be averaging, exclusive of your fees of going in and out of trades here, about $95 a day. And the cost? Yeah, $3 a day if you've got Tiger dollars. So for all you that bought some Tiger dollars out there, it's a great investment to putting yourself out there. And if you got more than $100,000 invested, well, then instead of it, then your ratio is $3 to, say, you've got $200,000, then you're looking at $190 a day out there. So a worthwhile investment to yourself out there. So as far as what do we want to be watching here today? You want to watch, I guess, on the New York Stock Exchange. If it'll change my bullish position if we see more than 530 net declining issues out there, because that would then all of a sudden turn the NYSE summation index down, move the oscillators below the zero mark. Right now, you've got 61 net advancing issues out there. The VIX index, we'd have to see that. You'd have to see that. Move higher. Right now it's at the low of its trading session. Plenty of liquidity out there. Yeah, they pulled away another $10 billion in bond buying or what have you, but, you got to take that in perspective. The market is still flush with cash. It's got to be put to work somewhere out there, and so, you can trade the news, or you can trade the technical patterns out here. I say stick with the technical patterns. Learn the technical patterns. There's plenty of them to learn from here at TFNN each day, 8-9 hours a day. With regard to that, and many of us obviously provide courses and classes that you can access as well. So. Those are the things I'd be watching for. I'd really be watching on the intraday charts out here. You've got those new rising price channels, that show the reversal of that descending the price channel here on the daily charts, or in the 120-minute charts for the NASDAQ. So they're suggesting that, that move was overdone to the downside. It was the reason that we went ahead and went long the NASDAQ. I expect it's like a rubber band. When you stretch it real far, you got that snap. Maybe it's going to be one heck of a nice snapback rally out there. Folks, stay tuned. Our man Basil Chapman is up next. It is Terrific Thursday. I'm not sure if Basil's doing 2 hours or if Larry's back with us, but either way, we'll get it. We'll get something playing for you. Stay tuned. Have a great day, folks. I look forward to seeing you in the morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls.
Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.